CNBC-TV18. This is Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Survi. Morning, guys.
Good morning, Prashant. Good morning, Nigel. Nigel's wearing well, semi-green, or should I say teal. That's one cue. Prashant looks pretty happy in shades of, pink, or should we say peach. And for me, I think the biggest cue, guys, is that it's Friday. But of course, there's a lot more that we need to talk about.
You mix all three colors, you probably get green. Right?
Prashant, normally we talk about the Friday rager, right?
Yeah.
There's no bigger rager than who we have in our midst.
Just need to sleep. Just need to sleep. But Prashant, take it off.
We'll get to that, Surabhi, in a bit. But it's a good morning, right? Yeah. It's a Friday, and on top of that, global markets are supportive. So I think that's the starting point. So let me just quickly run you through a few things to watch out for. Equity markets moved up last night despite, and I say despite, a rise in yields and a rise in dollar as well. Sometimes markets just move on. I remember saying this around the time of when the Adani news flow around Hindenburg, etc., broke, that the intensity with which the market will react to the same data point again and again reduces because the markets are well aware that this is happening. Well, how much more can you react, fall or rise? And I think something similar may be at work with the US as well. So equities came up a little bit. By the way, both the S&P and the NASDAQ were up 0.7%. The S&P once again, for the second time this week, defended the 200-day moving average, and it closed slightly above it. Now get to the rates market, right? So the US 10-year now is comfortably above the 4% mark. We closed at, I think, 4.06 or something. We're at about 0.54 right now. But it pulled back a little bit from the highs, just a tad little bit, 2 or 3 basis points off the highs. But it's a strong close. The dollar index is just under the 105 level. It hit a high of 105.18. So maybe the market is, sort of reading into these small pullbacks of the highs. By the way, you just look at day-on-day close, the dollar index ended about 0.4% up, not down. So this is still strong, but equity markets saw a little bit of relief starting to come through. It's not as if data is yielding as well. I mean, we had the initial jobless claims number which came through, which once again showed that the labor market in the US is tight. We get the jobs report next Friday, which of course is the big number. This entire turnaround in the US market started with the last jobs data, and we get the fresh jobs data next Friday. And if initial jobless claims are any indication, it's likely to be tight once again. The question is this, right? Across the rates market, things seem to be very oversold. You look at the 2-year, the 5-year, the 10-year, the 30-year bond tenors, all are deeply oversold. And that is the hope, technically speaking, which could limit further big upside. So, I would say a pullback is due as well. We'll see. Timing is the tough thing with these things, but it's possible one day we wake up with a 10, 12 basis point pullback in yields for no reason other than the fact that they've gone too much in one way without a pause. Market remains very data dependent in the US. The ISM, the US ISM number, services number is later today, and the services inflation has been the problem. So I think that becomes an important one. Now come to the market here, right? So the takeaway from the US is not bad. It's not unambiguously positive, but it's not bad. It's okay. The market, the SGX is indicating a positive start, a higher start, which will get us to yesterday's high, which is that number 17,467 or so is what the 460 or so is what the SGX Nifty is indicating in terms of an open, and that is the high point of yesterday's green candle becomes the first resistance which the market needs to take out. So 17,467 is the first level. Further resistance comes in at the retracement of the entire fall, the 6 or 7 day fall, which stands at about 17,600 and then 17,700. The exact numbers are on your screen, 591 and 695, but 17,600 and 17,700 are the other resistances beyond that. Support, of course, comes in at 17,255, which is the level you want to defend, which should not break if these upsides have to materialize. Bank Nifty closed at 40,390. There's not very much change there. The resistance comes in at retracements of the fall, which is at 4790 and then 41,070 for the banks. And of course, for banks, the positive, at the margin, the positive which has happened, of course, is the fact that a large foreign investor has come in as a buyer into the Adani Group stocks. The money doesn't go to the company, the money goes to the promoters, which means that perhaps there is a bit of deleveraging coming. And on the other side of the equation are banks, right? SBI and the like. So keep an eye on the banks and Bank Nifty consequently. Recent low of 40,073 is important, should not be broken on the downside. And of course, the big one is 39,600, but that's just some distance away. I don't think that comes into play today. So go with 40,073 as a stop, as a pivot, if you're trading, which should not be broken as a low 2 days back for the Nifty Bank as well. So as I said, it's not an adversarial picture globally speaking. You're looking at green, at least on equity indices, and SGX is indicative of a positive start as well. So it'll be high.
Hi, Prashant. Yes, positive to the extent of about 0.5%, 0.6%, at least as of now. I think critical for us always is, can you hold on to the
Yes.
opening pop? I think that's been the biggest problem with the market. We'll get our answers. Prashant, just to add, I completely take your point that on technicals, the market needed to move higher, and that's what it did yesterday, despite where the bond yields are. But if you just go back to fundamentals, I was looking at commentary. Raphael Bostic, the Atlanta Fed president, he said two things yesterday. The market chose to read into what it felt was more positive, the equity market. He went on to say that rates would need to go higher and remain elevated well into 2024. That was the first statement. Then he followed that commentary up by saying that he is in the camp that is pushing for a 25 basis points rate hike, not 50 basis points. Basically, he was indicating that the Fed needs to be a little more measured. The market latched on to that, okay, you'll hike rates, but at least one of the governors believes that it should be 25 basis points. That's the mindset of the market. It wanted to move higher after just intense pressure on the downside for so long. That's one. But that doesn't take away from the fact that data is still supporting rate hikes rather than a rate pause, whether you're looking at the Eurozone or you're looking at the US. In US, we had the jobless claims data, and jobless claims fell more than expected, 190,000. Move over to the Eurozone, there the inflation number, though it's lower than January at 8.5%, it was still higher than estimates. Estimates were saying 8.2%. Look at core inflation, that's still rising month on month. So, in real sense, the data is still supporting a lot of the hawks out there, though, as Prashant's saying on technicals, just purely on technicals, the market needed some relief, and it literally latched onto that when it had the opportunity. Back home here, the big question that we'll be asking a lot of the experts as we go along is whether the Adani overhang, at least that one big factor, whether that's completely out of the market now. We've seen two big sort of events take place yesterday. One is what the Supreme Court order literally said, because now it's finite, it's time-bound. 2 months, and SEBI needs to come out with its report and submit that to the panel. And second, obviously, the developments that happened with respect to the block deal, the serious money that the promoters have managed to raise, 15,400 odd crores. And I guess, Prashant, I think a lot of the chatter now is going to be about GQG, this entity, their background. I mean, they're pretty large. We're talking almost $100 billion in assets that they're managing. They're listed in Australia. The man behind this entity, Rajiv Jain, has been in the equity markets. He's been managing money for 20 odd years. So I think there's going to be a lot of chatter about how much confidence can you take from the fact that it's this entity that's pumped in that money? That will definitely be dominating, mind space. Talk about the FIIs. Yesterday's numbers are obviously skewed because you had these blocks happening for over 15,400 crores. Net numbers positive. DIs were also positive to the extent of about 2,000. So that's what we have. But I think net, Nigel, as we're getting into the start, at least it's more positive than negative. And the bulls will hope that it's not a flash in the pan, as we saw in the middle of the week.
Well, that's right. Surbhi, yesterday, weekly expiry played out in favor of the bears.
Yes, yes.
But today, in fact, the SGX Nifty is suggesting a big uptake. And we're going to start off above that 200 DMA odd. So that's a perfect scenario that makes it for a freaky Friday. It can swing any which ways. And for me, the biggest factor will be the Nifty Bank. Because this big US fund, going ahead and buying a large stake from the Adani promoters, is it enough to fire up the Nifty Bank? Remember, the Nifty Bank took the hardest hit post this, this entire Adani fiasco that did break up. Now, the Nifty Bank yesterday, you would say, hey, you're a little disappointed because it ended under pressure. Until midway through the trading session, well, it was trying to hold one end up. But towards the end of the trade, well, it ended at the low point of the day. Just to, related to cricketing terms, you had Pujara yesterday was playing a good knock. But unfortunately, we didn't put in enough runs, right? So till midday yesterday, the Nifty Bank was doing fine, but then it gave away all that advantage. But not too worried over there, because there was unwinding of long positions that we saw. The open interest was lower. The Nifty Bank ended with a cut-off closure around, 300 points odd. What do the FIs do? They unbound some long positions, and it appears they unbound long positions on the Nifty Bank itself. 8,000 long contracts, they got unbound. The previous trading session, they added 8,000 odd. All of that got unbound. And they continue to remain net short. Close to 85% of their positioning is on the short side. If we
85%, that's still 85% net short.
And we can hold above that 200 DMA, that's what could be the big trigger. Because then you have a short covering bounce that could be due. If we can hold on to this big gap up that we're looking at. On the option side, 17,400 call, 17,300 put. Well, both of them were very, very active. So let's plug in the numbers itself out there. You know, on the Nifty, the levels you're looking at is close to around 17,400, which is the 200 DMA out there. Just going by the 17,400 call writing that we're seeing, they are looking to defend 17,450 to 17,500. But first stop is around 200 DMA. So you want to hold about those levels. Recent low earlier this week was 17,255. So that's your support zone. But the Nifty Bank, that's the vital factor today. And there was some writing at around the 40,500 call. Close to around 270 rupees is the premium. So you plug in the 300 rupees with the 40,500 odd, you get your resistance zone of around 40,800. So that's a very, very important mark. And the recent low becomes support. Short point, SGX Nifty suggesting a good start. That'll be a thumbs up. Watch the first star. If we can hold on to those levels, we could be in for a bit of a short squeeze today. That's predominantly if the Nifty Bank can bat it out and play a good innings today.
All right, Nigel. So it's a higher start, 100 points higher, almost exactly at yesterday's high. You know, can we build on top of that is the question, which we will try and figure out. Well, before we get into the show, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe. Cameron Brand of EPFR Global will tell us which way flows are going. So that's the global setup. And later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At about 8:30 this morning, we'll do a quick fundamental check with Nishal Maheshwari on Centrum Broking. We'll discuss, of course, the Adani news flow and much more.
All right, let's move on to the equity call of the morning, and we do have one coming in. This is from Bernstein. On equities, Rupal Agarwal of Bernstein says, in recent conversations, many investors in India indicated a preference towards GARP stocks, that's growth at reasonable price, or stocks with growth at a reasonable price. The fundamental thought process is to pick high growth companies as there is scarcity of growth, however, not paying up significant premium, hence the need for GARP. This also solves for the rich valuation concern within Indian equities. Previously, they had highlighted that tactically this is not the best time to add exposure to growth stocks, as a macro slowdown or recession is not the best environment for growth names to do well, and even the valuation earnings support for these names looks weak.
Well, let's get you some money market views as well. Bhaskar Panda of HDFC Bank says U.S. initial jobless claims data has reinforced the belief that U.S. employment scene is still robust, which could mean the Fed pushing for higher rates if this trend continues. He says this has pushed U.S. yields and thus the dollar index higher. He adds reopening of China is Asia positive, hence the Asia ex-Japan pack could do better. Given this backdrop and the fact that the USD INR pair has been recently capped at 83 to $1 levels, Bhaskar sees consolidation for the time being. He expects the dollar INR pair to trade in a range of between 82.3 to 82.5 to $1.
And on bonds, Bhaskar Panda of HDFC Bank says the yields have been trading higher, tracking global markets, but consolidation below 7.5% in the 10-year yield is expected. Hence, he expects the 10-year benchmark to trade in a range of 7.4 to 7.45% for now.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We're obviously looking at the Adani Group stocks, Adani Enterprises, Adani Green, Adani Ports, Adani Transmission, all of them. And in fact, you have GAIL, Mahindra & Mahindra Financial, Nasdaq, Natco Pharma, and Bharat Forge. Their stocks on the back of positive news flow. However, we got a disclosure late last night on Olympic Pharma, so that one should react negatively to that piece of news.
Okay, well, we have Cameron Brand, Director of Research at EPFR Global, now joining in to take some questions. Cameron, great. Thank you very much for joining us. Great to have you with us here on CNBC-TV18. Are global emerging market funds seeing outflows, Cameron? Could you tell us what's been the picture so far in 2023? Because we get about 90-95% of our foreign money through these GEM funds. So what's going on?
So what's going on has been steady but not spectacular inflows into that particular group. From the Indian perspective, the fact that the flows have been sort of gliding downwards and the managers of those funds have on average rotated some of the India exposure they built up late last year back to China. It isn't quite the happy picture it was coming into this year. But the flows in general to emerging markets are showing some resilience. Investors aren't running wild on them. But there's definitely, we're seeing some interest in corners of the emerging market universe that really haven't seen much money of late. And the good news from a Chinese perspective with regards to their manufacturing sector certainly lit a fire this week under flows into dedicated China equity funds.
Cameron, hi, good morning. Could you elaborate on that? Because for us sitting here in Mumbai, from our perspective, one of the issues was that a lot of this foreign money was moving towards China and not necessarily coming into India. Valuations are the reasons we were a better performing market in 2022 and so on. In terms of flows, is China still getting the lion's share, or do you see some of that emerging market money now also trickling back into India, perhaps?
So since we last talked, what happened was after a lengthy period of China funds really getting the lion's share, we had a month-long period where we actually saw some outflows from dedicated China funds, while flows to dedicated India funds, again, while they haven't knocked it out of the park, they've been consistently positive week to week. But at the moment, the dominant emerging markets narrative is the China rebound. And investors seem, and this is broadly true, very hungry for any positive narrative to back. So I think going forward, until something else crops up, we're likely to see a reversion to the China first pattern to emerging markets fund flows.
Okay, so you're saying that you will see a reversion to flows going back into China, while India funds are still pretty consistent in getting the money.
Yes. Flows to India haven't taken off to quite the degree I was expecting, but they've been very consistent, which I think is positive. Whereas flows to China at the moment have a certain feast or famine quality. Now it's mostly been feast in anticipation of this rebound. But I think India is pretty well placed at the moment, thinking about emerging markets.
All right. Hi, Mr. Brandt. Shifting focus away from the equities then, what about gold and bonds? Are you seeing, this sort of a dicey market setup, are you seeing incremental flows moving to those asset classes?
As a matter of fact, I'm not, which I'm a little surprised about, certainly the gold funds. But I think that, and actually with emerging market debt as well, is a reflection of the fairly rapid retreat from the consensus that U.S. interest rates would plateau early and perhaps even start to decline towards the end of the year.
We'll leave it there, Cameron. Great speaking with you. Appreciate you joining in, and thank you for running us through what you're making of things, flows, etc. It's a pleasure speaking with you. Well, we'll take a quick commercial break, and we'll come back with our research team, which is standing by with CNBC-TV18's list of top 10 stocks for the day. Stay with us.
Welcome back. Here with us on Bazaar, and the morning setup looks at least good for now. We're looking at about a 0.5% increase on the SGX Nifty, 105 points higher. Let's focus on, of course, the big story that played out towards late last evening. The Adani Group promoters have sold stakes in 4 companies to GQG partners for a total consideration of 15,446 crore rupees. The promoter entity, SB Adani Family Trust, offloaded stocks in these group companies via multiple block deals yesterday in the day's trading action. Nimesh is joining in. Everything that we need to know about this. Nimesh, good morning. You had been alerting us about this in Closing Bell as well, and then we finally got the confirmation late in the evening. So tell us, this money obviously is going to the promoters. What's the market sense on this? Will they use it to reduce pledges, or how does it play out?
Well, Sirvi, this is indeed a big corporate development wherein the Adani family promoters have managed to raise 15,500 crores from one of the marqueest of the FINA, which is GQG Partners, which is run by Rajiv Jain. Now, they've sold stake in the 4 group entities, which is Adani Ports 8.6 crores, Adani Green 5.5 crores, Adani Transmission 2.8 crores, and in Adani Enterprise 4 crores shares got sold. So put together, they've raised 15,500 crores. Now, what they will use for is a realms of speculation. There is an expectation that they will like to reduce the pledge shares in all these 4 group companies. There is an expectation of they going ahead now with this money, subscribing to the Ambuja preferential warrants as well. So there are a lot of combinations and permutations which can be worked out. But the fact that the promoter entity has raised 15,500 crores and from one of the best names in this world will be a definitely positive for not only Adani Group stocks, but will have a rub-off on the bank stocks as well today.
Okay, all right, Nimesh, thanks very much for the details. They will definitely watch out for those names. In fact, we will do a very detailed discussion on all the developments surrounding the group yesterday, including, of course, some of the very important statements that came in from the court, the ruling where they've told SEBI to come out with their probe findings in 2 months' time. All of that coming up at 8:30. We'll have Prakash Diwan join in, Sandeep Parekh of FinSec Law on the legal aspects of this, as well as Sriram Subramaniam of InGovern on, of course, the corporate governance and disclosure aspects, which the public is, of course, debating.
Okay, all right. Well, let's move on then. Another stock that's going to be in focus is Olympic Pharma, and that's the lone stock in our top 10 that's likely to open up in the red, reacting to news that came late last night. Ekta joins us to fill us in with that update. Morning, Ekta.
Morning. Well, yes, it's definitely negative news which has come in for Alembic because they've taken an impairment review of their capital work in progress. So the impairment is to the tune of 1,150 odd crores, which is identified as capital work in progress, and it is taken on account of 3 new manufacturing facilities, which is basically 3 facilities in Gujarat. The write-down as per the company is on account of COVID-19, price erosion in the US markets, plus rates impacting the approval process from plants, basically a higher rate scenario globally. Now, they have said that basically the capital work in progress for the manufacturing facilities is higher than the recoverable amount. Secondly, they will be reorganizing their general reserves, which is to the tune of around 1,894 odd crores. So basically, these general reserves will be used in some form or manner in order to for the write down. So it is, I've spoken to a lot of people who look at the stock, and they have said that it is quite negative, considering that the company has already written off a significant amount with regards to Allure Derma, a JV that they had bought stake in some time ago, and hence the total amount of write-offs is over 1,000 odd crores for the company now, and hence it would be read negatively.
All right, Ekta, thank you very much for that. Now, GAIL should be in focus. Sonal is standing by to tell us why. Sonal, hi, morning.
Good morning, Prashant. Well, GAIL will be in focus because the regulator PNGRB, they've gone ahead and proposed a tariff hike to the tune of $60.92 per MMBTU. That's the tariff that they want to take it to, which would mean a 41% hike in GAIL's current tariff pipeline tariffs as well. Now, GAIL, remember, had recently proposed that the integrated tariffs across their pipeline should get an increase. They had proposed a 70% hike in tariff for their pipelines, but PNGRB has gone ahead and said that they will be able to increase it only by 41%, which is a fair number because Street was expecting a hike between 40 to 50% as well. Now, Morgan Stanley says that if this is actually approved, it would imply a 25% increase in the pipeline or the transmission business for GAIL as well, and it will lead to an increase in EPS by 12 to 14%. Important to remember, it is just a proposal. There is consultation which is pending on 6th of March. Post that is when the final decision will come through. But if 40% is hiked, it will be positive for GAIL, and that's why the stock is in focus today.
Okay, thank you, Sonal, for that. That seems to be pretty significant. EPS impact of 12 to 14% as per some Street estimates. Let's go to Abhishek. Abhishek, morning. Mahindra & Mahindra Financial Services, business update. How does it look?
Well, the business update looks fairly well if you take into comparison, January. So February business update does show that, the disbursements are at 4,185 crore, which is up more than 53% YOY and more than 4.5% on a month-on-month basis. However, this is the second lowest disbursements that you are seeing in last 5 months. A collection efficiency that was at 97% in Feb when compared to 95% in January and 98% on a YOY basis. So asset quality, the gross NPA ratio is similar to Jan levels, which was around 6.2%. The assets grew by 1.5% month on month. And so far, for the first 2 months, they have disbursed about 8,185 crore, which compares to about 5,053 crore in the same time last year and about 9,750 crore that you saw in Q3's first 2 months. So just to alert our viewers, the October was a festive month, so the disbursements trend should be higher in that quarter. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, let's move on to Rima. She's joining in with some more stocks in the news. Morning, Rima.
Hi, good morning. So let me start with Bharat Forge because the Class 8 February truck orders, the North America truck orders have been revealed, and it's a better picture. So year on year, there is a growth of 10%. Month on month, there is an improvement of 5.6%. Remember, last month, in the month of January, there was a sharp drop-off in the North America Class 8 trucks. So just to give you some numbers, February had a figure of close to about 28,500. In the month of January, it dropped to 21,600, and that's when we were worrying. But that number has picked up a bit, now to 22,800. So some concerns on that front have been allayed. So Bharat Forge should be on your radar. Mastech, remember Mastech is an IT services company, a mid-cap company. It historically got a majority of its revenues from UK and Europe. But now increasingly they're focusing in on the American market as well. And America roughly contributes about 27-28% to their revenues. And here they have appointed Vijay Iyer, who was earlier in Persistent, as the president of the America region to fuel their business. And Natco Pharma should be on your radar because there is a board meeting on 8th of March where they will consider a buyback. I was reading in there, the conference call of, the transcript of the conference call. They have ample cash in their books, 1,080 crores and very little debt. They have a little bit of working capital, but they have a fair amount of cash in their books to do a buyback. So 8th of March is the date you need to watch. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, let's run you through a quick recap of all the stocks we just covered. Stocks with positive news flow. They have the Adani Group stocks. That's Enterprises, Green, Ports, Transmission. Then you have GAIL, Mahindra Financial, Mastech, Natco Pharma, and Bharat Forge. While Olympic Pharma is the lone one that could open up in the red.
All right, we take a quick break on that note. Coming up on the other side, we'll be in conversation with Nishal Maheshwari of Centrum Broking, discuss some fundamental ideas, and of course later we put the focus on the Adani saga. A lot of developments over the last 24 hours. Our panel of experts joins in to weigh in on the impact.
Welcome back. You're tuned into Bazaar Morning Call. You're on CNBC-TV18. And hope you're having a good Friday morning because the SGX Nifty is suggesting that we're likely to start off gap up 100 points odd. Positive, handover overnight, and also news on the Adani Group could keep the indices in the green, at least for starters. But we've got plenty of stocks to talk about, so let's get straight to Nishal Maheshwari, CEO, Institutional Equities and Advisory at Centrum Broking, who joins us. Morning, Nishal. Thanks so much for joining in. Well, let's focus on GAIL first, one of those stocks that could be reacting to the news flow. PNGRB, well, they have proposed unified pipeline increase, the tariff increase of close to around 40%. The ask was 60-70% odd, but 40% isn't bad. What's your sense? How does the stock move from here on? It's been relatively an outperformer for the last couple of weeks.
Thanks, Nigel. Morning to you. I think this was slightly below than expected. I think most of the market was expecting, and I think the stock has gone up in anticipation of that. So we are a bit disappointed, basically. We were expecting something like 50% plus kind of increase. So I think in the short term, you might see some reaction on the stock. But given that there has been a good development, basically whatever may be lower than the market expectations, I think the stock is worth looking at these prices.
Okay, Nishal, hi, good morning. Market, obviously just your thoughts on the way things have shaped up. Absolutely range-bound, negative bias. We're hoping for some sort of a reversal today. Don't know if that comes or not. What do you make of the overall environment, and are you incrementally deploying additional money, or are you still on the sidelines in a wait and watch mode?
Morning, Surbi. Yes. So I think you asked me quite a few questions. So let me just try and enumerate each one of them. So overall, I still continue to remain negative on the market. But in the short term, basically, I think we are hugely oversold. And these positive news which have come yesterday, basically, I think it will stabilize the market, and possibly we will see relief rally happening, I think, for the next few days. But I would actually still wait out and see, basically, because if you look at the US numbers for unemployment, it is still very strong. So I continue to believe, basically, that there is going to be rate hikes further, basically, in the US, and India has to follow. And if this higher for longer continues, basically, I think we have some more way to go. So this rally should be looked at, basically selling on sell on rallies kind of a story at the moment. So I think taking profits is what I would recommend at the moment.
Taking profits is what you would recommend. What is, just a quick word on banks, if you will, Nishal. In light of what has happened with the Adani investment, which has come through, why those block deals? The collateral damage were banks, although, as has been widely publicized, the overall exposure to the banking system was less than 1% of total loans. Do you think this is a space which perhaps gets a bit of a lift, maybe a trading lift, but a lift nevertheless?
Definitely, Prashant. I think whatever, I think sentimentally, I think it was a bit negative. Otherwise, I was very, I don't think the market was expecting anything negative to come out of this whole episode for the banking sector per se. One, obviously, the exposure was not very large. And secondly, I think Adani anyway had very, very strong assets on the ground. So there was, I'm saying there, as far as collaterals were concerned, they were fairly in place. So didn't expect much to happen on the banking side. But I think overall banking has done very well in the last 1 year. Last quarter has been the peak of earnings, basically, as far as banks is concerned, because now the liability side increases are happening. You are seeing most banks increasing their FD rates. So when the liability side starts going up, basically, and they'll not be able to pass on with these kind of increases, what has happened. So I think NIMs are going to actually compress. So I think that's what most market is actually factoring in, that banks, possibly they have given the best quarter last quarter. So incrementally, it's not going to be as strong. And that's why I think people are taking away profits.
Okay, got that, Nishal. Just stay on, Nishal. We'll come back to you in just a few minutes, because for now, we're going to put the spotlight on the biggest story that the market is tracking. And that is all the developments surrounding the Adani Group that have taken place in the last 24 hours. We have our expert panel with us now. Market expert Prakash Diwan joins in. We have Sandeep Parekh, managing partner at FinSec Law Advisors, as well as Sriram Subramanian, founder and MD at InGovern. Gentlemen, good morning and thank you for joining in. Sandeep, I want to start with you to just understand the nuances around the Supreme Court order that came out yesterday. Now, the market is loving it because it seems to be putting a timeline to things. SEBI has been given 2 months' time to see if there's any violation of securities law and then submit the report to this panel. what happens then on? I mean, the panel can take its own time. I'm not sure. What's the remit of the panel? Can it overturn some of SEBI's recommendations? Basically, from a market standpoint, do you see this wrapping up in 2 months, or could it drag on?
Hi. So I think it could drag on because, 2 months is the time given to SEBI to investigate, and then the panel would review it, I presume, and then at some point give it in a sealed envelope to the Supreme Court, or I don't know if they make an open report. And then Supreme Court will kind of probably give a copy to the other side, which would be the government, SEBI, etc., and then ask them to kind of file their affidavit. So it's kind of will go into a process, which means it's still a couple of months away, really. But I think in terms of certainty, yes, I think this will bring some certainty to the entire, the factual matrix, which seems to be quite blurry at this point of time.
Okay. The other development, obviously, is this equity raise that the promoters have managed to do. And Prakash, let me get your sense on this. So we know the numbers, 15,400 and 50 odd crores have come in. Does it inspire confidence, the entity GQG? And how do you see the market taking a stance on the Adani Group companies from here on?
Good morning, Surabhi. So I think it's absolutely a coup of sorts to get somebody like GQG to buy into, the Adani portfolio of companies at this point in time, where the world is still looking at it with doubt and still a little bit of lack of confidence. So if you see the kind of portfolio buildup that this fund already has in India, it's almost like the nifty companies. I mean, this probably. This is an opportunistic call that they've made to buy into companies where they see value in the long term, and primarily predicated by the fact that these businesses have very strong assets to rely on in terms of this thing. So what it does for the market, which is more important, is it tells you that the promoters of this group have actually started making sure that even if they were to sell the family silver, but save the larger portfolio of companies, and the business doesn't get impacted. Because remember, all the business projections that we've been talking about, the salience within each of these companies is dependent on how much they can grow, at what pace they can grow. So while that pace might come down, the certainty goes up. So there's a lot of anxiety that goes out of the market. This is definitely going to get a lot of naysayers to kind of look at things at least more tepidly, not so negatively. But that doesn't mean that everybody turns positive. People be still skeptical and want to sell at any rise. So because they would probably believe that it takes much more than just one fund buying about $2 billion into the group. But there is definitely a huge relief that the banks will see, that the overall market will start sensing from this acquisition, this buying into the portfolio.
Hi, good morning, gentlemen. Prakash, just want to make a quick point. Everyone was worried that MSCI selling will come about. Now it'll be interesting to see how that plays out, because the promoter entity has sold, so the free float goes up. So will that be realignment of those portfolios? We'll have to wait for a verdict coming in from MSCI. So that's going to be, an interesting point as well to track. But Prakash, which stocks would you focus on today? Now, some of those stocks, they saw the large trade yesterday. One school of thought is, maybe now the promoter, they have 15,000 crores odd that they still have to put in the warrant conversion in Ambuja Cements. Will that look far better right now? Or will you look at some of those banking names? Because exposure or not, they got hit the hardest once this entire Adani fiasco broke out. So which stocks will be on your buy list post this?
So, Nigel, it's quite tricky, because the banking stocks will respond to this with a little bit of a short-term sentimental change, because it was never so fundamentally debilitating for them when things went bad, right? Beyond that 1% exposure, or technically it could be 1%, but in terms of impact, it could have been slightly more. So there will be this bump up, and traders could take advantage of that pop. But where the value starts getting very visibly centered in the Adani Group of companies is things like Ambuja Cement. You have a business that has been so strong in a cycle which is poised so well, and scale which is so formidable. So I don't see, and there's never been any change in the stock price in the last 1 year, which is as dramatic as an Adani Green or something. So let me make it simpler. What I would not look at buying into is an Adani Green or an Adani Power, or at this point in time. But the ports business, which has clocked some amazing numbers,
is something which will keep on coming up with encouraging numbers, which will eclipse all these issues that you had on the pricing. So, you have these pockets where you could do, but don't be in a hurry. Let the market also give its verdict, and you may get an opportunity to buy into these. Once this temporary exuberance is also kind of digested of sorts.
By the way, guys, I'll put this out in detail, but Rajiv Jain has given an interview to the Australian Financial Review, a newspaper. The fund is based out of there. It's listed
in Australia, yeah.
Australia. And it's pretty interesting comments. I mean, on Hindenburg, and this is a quote, they say that they have their view, we have our view, and we happen to disagree. But that's what makes a market. I mean, I read through the piece, the interview which is given, and clearly they don't see any, the first takeaway is they don't see any corporate governance issues at all, right? On corporate governance, maybe we should have the graphics ready, but I just want to read this out. They say, on corporate governance, they say, a lot of governments come and gone in this period. Frauds typically don't last 30 years. They last 3 months, 3 years, maybe, but not 30 years. And they talk about the value creation over the decades, etc. So it's an interesting piece backing the investment, which they've made over 15,000 crores.
Yeah, so that's a very interesting one. And yeah, we should get some of those quotes up on the screen in due course. Let me take that forward with you, Mr. Subramanian. And that's the real thing. Yes, this group, GQG, it has come in to back the Adanis, but they've done it at a price. They've done it at a price which ranges between 40% to 80% of the peak that these stocks saw. So let's not lose that reality as well. I mean, as they say in the market, everything is good at a price. But from shareholders' perspective, especially a lot of the retail shareholders that might still be owning these stocks, if at all, what should they watch out for as these parallel developments take shape? There is the SEBI probe, which we discussed with Sandeep. And then there's this big marquee investor coming in saying that, they believe in the story. How should shareholders navigate this now?
Good morning. Firstly, SEBI's probe or the Supreme Court Committee's probe should not go into price action. That is, they should not look at valuations. They should not look at price actions. Because as the comment said, everybody has a view on the market. GQG could have a positive view, Hindenburg had a negative view. And though the price has tanked, both are opportunists in that sense. So retail investors obviously should only be worried about the level of disclosures. The regulator should be worried about whether there was round tripping, and if there was round tripping, what were the issues of round tripping, and whether that is a market-wide phenomenon, not just restricted to Adani Group of stocks, but whether it was a market-wide phenomenon. So to that extent, retail investors should, right now, of course, be specific to the Adani Group of stocks, stay away. Divanji also gave some insights on that.
Okay, so caution is what this panel is advising. And take your point, I mean, a lot of these allegations on related party transactions, X of price, it has nothing to do with how the shares are moving. But some of these, of course, issues will be taken up by SEBI. Thank you very much, gentlemen, for joining in with your quick take on this important story that the market will continue to look at going forward. We need to get into a very quick break on that note. On the other side, we have Mitesh Thakur joining in along with Shrikant Chauhan of Kotak Securities. We'll get some technical ideas going in the market today.
All right, welcome back. We're just counting down to the pre-open session. 10 minutes out. Let's just have the SGX up just to take a quick look at what the movement is. It was indicating a solid higher start. And I think we should be starting somewhere near a day before yesterday's high point. So 17,465, almost exactly at that level with this 110-point uptick if we get that. Mitesh is with us and so is Shrikant Chauhan for some technical trading ideas. Gentlemen, great to have both of you as always. Friday morning. Mitesh, let's start with you. What's your sense? I mean, 100 down day before, 100 up day before, 100 down yesterday, and 100 up today. So this is a bit of a zigzag. How would you trade it?
Morning, Prashant. So day before yesterday, the movement, I think was very positive, and I thought that we possibly turned a corner at least in the short term, and we look at an upside. And yesterday kind of negated that. But I think the overall indicator setup, from the hourly and the 2 hourly charts is still in rising mode, though the volatility indicators are flat. So I suspect that the recent, the day before yesterday and yesterday's high of 17,450, 500, that 50-point zone should be visited, and that might happen in the opening as you were just highlighting. I think if we start getting past 17,500, that will add to strength, and 17,650, 700 then becomes the next target area. So trading with positive bias mildly, at least to begin the day with. Let's see how it reacts immediately after opening. If there is no strong selling through, there could be a 20, 30-point kind of a dip after a 100-point opening. But if there's no strong selling happening post that, then I think we'll add on to long position in a slightly aggressive manner. And partly, I think this is also due to the fact that the bank nifty still remains, index, which could possibly add to strength if it starts getting past the day before yesterday's high of around 40,700. So I think if that is cleared, then I think both the indices should do well in the next 3 to 4 days.
Okay, got that. Mitesh, stay on. We'll come back to you in just a bit. Shrikant is also with us. Shrikant, morning. How are you looking at the setup? Would you play for a relief rally?
Yeah. Good morning, Surbi. Good morning, Prashant. Good morning, everyone. I think, yeah, definitely the market is it's consolidating between the range of 17,500 and 17,300. Even though there was a sharp weakness on Thursday and there was huge amount of pressure, we saw the market was holding well above the mark of 17,300. So if we see the pattern of last 3 days, then the market is like resilient around 17,300 levels. And on the dismissal of 17,500, we can expect technical breakout in the market. So today, or for the next few days, 17,500 is going to act as crucial level for the market. Above that, we can again expect 17,750. And for the day, if there is any correction during the day because of any reason, then we should look for adding some long positions with a stop loss at 17,300. But if we see the market is crossing 17,500, then there also we should look for adding some long positions.
What would you want to trade individually in terms of stocks, Srikanth?
Okay, so in that phase, in that particular space, we would like to go with those stocks where there is huge amount of momentum, like Voltas, which is currently around 918, 915. There we are expecting stock to move towards 950, 960. It is forming rising top, rising bottom series. So it's a buy at current levels with a stop loss at 905. And the other stock which we like is State Bank of India. The reason is because here also the stock has formed higher bottom sort of formation. And based on technicals, it seems that it is heading for the levels of 550. So it's a buy at current levels with a stop loss at 524.
And Mitesh, what about you? Your picks?
Prashant, I have more of buy calls today. Lal Path Lab is something which is showing signs of bottoming out. It needs to get past 2,000 to signal and confirm a reversal. So buy about 2,000 with a stop at 1975 for a target of 2075. Colgate, after a good correction, seems to have turned a leaf in the short term at least. So that's a buy with a stop at 1485 for a first target of 1535. And another stock which has corrected a lot, could possibly reverse, is Deepak Nitrate. That's a buy with a stop at 1810 for a target of 1865. And Berger Paint, something which I've recommended in the last few days, that remains a buy as well. Keep a stop below 575, look for a target of 600.
Okay, all right, gentlemen, great having both of you with us, and we'll come back to you in a bit, Mitesh and Srikanth. We'll take a quick commercial break here, 5 minutes to the pre-open session. We are back. Harshit Kapadia of Elara Capital will also be joining in to discuss the developments in the Indian defense sector. We'll talk individual stocks with him. Stay tuned for that conversation.